we have a special guest joining us this morning, Kumar Gupta, founder of FinTrekk Capital. Amit, good morning. Help us understand what is the mood of the market. It seems to be in a very, very solid state of consolidation and very news-based movements that we are seeing. Beyond that, no real mood that can be defined on the markets, positive or negative.
Yeah, hi, good morning, Kartik. Thank you for having me. Yes, I think Indian equities continue its upward rise, supported by the global uh, policy uncertainty easing. There is a global rally in the risk assets. There is a better than expected domestic growth data which came last week. And then you had, on Friday, a higher than expected monetary policy stimulus from the RBI.
That's right.
So in that sense, markets are doing well. Even though I must add that they are sort of underperforming the MSCI World Index or MSCI Asia Index. But then broader markets, small and mid caps have outperformed large cap. We have almost seen a 30 to 35% rally from the April lows. So yeah, I think it's a catch up on the small and mid caps as compared to large caps. So I expect that over the next 6 to 12 months, this positive stance would actually stay on course.
Stay on course. But what we are seeing in the IT sector today, Amit, of course, seems to be a bit of a bloodbath. Now, I think this could be perhaps triggering from what we have seen unfold in the US. While Donald Trump calls the China deal a done deal, there's no real clarity on the contours of the deal between US and China. Now, US futures are down even after the positive inflation print that came in recently. So how are global markets really viewing what is happening between US and China? And why is the IT sector responding so negatively?
I think globally, it's mostly driven by what happened with the tariff negotiations. So we have seen some breakthrough last evening between US and China happening. Still, I think 55% tariff on certain products is too high. So there is scope of further negotiations coming along. Mostly market is reacting to Trump's policies and the global trade negotiations which are happening. So I think IT is probably reacting to that. There are also, some new versions of OpenAI launched, in the last few days. So those are considered to be more disruptive. So Nifty IT is sort of reacting to that. In general, I think over the next 6 months, Nifty IT would face some issues in incorporating what AI changes are bringing to the table.
Right.
And that's why you'll keep on seeing this -1 +1 kind of moves on a day or on a daily basis.
All right. So -1 +1 moves may not be really the kind of volatility that investors look forward to, Amit. But I want to now draw your attention to the auto sector. And auto sector, again, we are looking at Mahindra and Mahindra and Tata Motors, both companies which are foraying into the electric vehicle space. In fact, Tata Motors being the market leader in EVs, Mahindra trying to catch up fast. But the fact is that we really don't know whether that delegation of 40 to 50 Indian executives will get clearance from Beijing to go ahead and negotiate the magnets deal with China. Now, there is obviously some pain likely to hit Indian EV makers in the next, in the short term, if we can put it that way. We really don't know how long that short term is really going to be. But any other triggers which are adding pressure on Tata Motors and Mahindra this morning? Both the stocks are down about 0.5% in trade.
No, not really. I think mostly, the tariff negotiations will be critical, more so for Tata Motors because, it's a large export component. JLR is big in China, so that could be one of the triggers. My sense is that over the next 1 month, when we'll have more clarity on what are the exact tariffs, and with the rare metal earth kind of a situation, how the export of that from China is happening. These stocks should do well. Remember, we now have abundant liquidity, rates cuts have down, so EMIs will be much more better. So people discretionary consumption will pick up in the next 12 months or so. So I'm not really very negative on the auto pact. I think over the next 1 month, probably a little bit more volatility will be there because of the Trump tariff negotiations.
All right, and I now want to shift focus to the geopolitical tensions which are likely to rise in the Middle East as Iran is threatening to attack US bases in the region if nuclear talks between US and Iran fall through the cracks, and the conflict is what Iran calls imposed upon them. Now, this news has sent oil prices soaring past $70 a barrel and will keep oil-sensitive stocks like ONGC, HPCL, Reliance, etc., under some sort of a spot today. And we are seeing that, in fact, already on the energy minerals on the Nifty 50 heat map this morning. ONGC is up more than 3% already, perhaps coming on the news of oil prices globally breaching that $70 a barrel. Meanwhile, Reliance is also up about 0.3%. What's your view on the energy pack, Amit? Are we likely to see this rally continue if oil prices continue to go up globally?
Yeah, I think Iran and defense, Iran and US sort of, have this conflict going on for quite some time, and Trump has been very vocal about it. That he is losing confidence that a deal would be agreed between US and Iran. So they already had sort of five round of talks since April. When the tariffs were first came along board the board. The key agreement is to place constraints on Iran's uranium enrichment. If that doesn't happen, there could be attacks, and I think U.S. crude oil in general is reacting to that.
Right.
Very difficult to predict what will happen in the short term, but technically, I think we had a small breakout. Out of 65 zone, there was a resistance at 65. We have now moved ahead, so it can rally a little bit more till 74, 75, I think. Overall, given the supply and the demand dynamics at this point of time, I would say it will be difficult until unless there is a war kind of a situation. It will be difficult to go past 75. So probably 65 to 75 will be the new range.
Okay, 65 to 75 will be the new range, but well below the near $100 that we had seen once upon a time. So overall impact on India's GDP, leave alone the stock story and those who are betting on oil at the moment. But as far as India's GDP is concerned, anything below 75 is likely to augur well for India's growth, wouldn't it?
Yes, I think, RBI projections which came out last Friday, that also is undertaking around 78 to $80 for the for this current financial year as a base price. So even RBI does not expect crude oil to sustain above $80. So my sense is till crude prices are low, that's a additional benefit to the fiscal situation of India.
All right. I want to now bring into our conversation an interesting result update that we got from Zara India last evening. And Zara's FY25 sales have come in flat at 2782 crore rupees. But profit, meanwhile, is up 23% at almost 300 crore rupees. We are seeing Tata's Trent stock up about 0.7% or so in trade. I don't know whether we can look at one company as an example of India's overall urban consumption story, but do you think there's an indication here that perhaps urban consumption is ticking back slowly, Amit?
I mean, it's difficult to project that to other companies also, because every company differs. But Zara sort of competes with the Uniqlo or even H&M sector. So that comparison would be much better to do. But in general, the discretionary consumption is expected to pick up in the next 6 to 12 months. As we said, there is a trickle down effect of the tax cuts. Now RBI has also cut, so the lending rates have also come down. In certain cases, PSU banks have already passed on these rate cuts immediately. So that's a good sign that some discretionary consumption will pick up. And liquidity will also ease up from September because RBI has cut CRR for 100 basis points.
Right.
So my sense is that discretionary consumption should do well. Which pockets it will do well, whether it is apparel retailers, footwears, whether it is alcohol, so that's an investment call one needs to make.
All right, and finally, I want to draw your attention to Geo Financial Services. Now, Geo BlackRock Investment Advisors has received approval from the stock market regulators SEBI to operate as an investment advisor. That news came in yesterday, but surprisingly, Geo Financial Services is down about 0.5% in trade today. Why are markets reacting negatively to that news?
I'm not sure why today, but in general, I think that's a very, very positive news for Geo Financial. The license has been awaited for quite some time. They've already started recruiting. I was going through my LinkedIn feed and I saw a lot of people, joining. A lot of good management people, fund managers, analysts are joining Geo BlackRock. So my sense is that. We are very close to it. In fact, yesterday only Geo BlackRock has filed two schemes in liquid fund and money market funds with the SEBI. Usually it takes 30 to 45 days for the schemes to get clear. So my sense is that probably closer to 15th August or so, we'll see the AMC operations getting activated. So I'm not really too much concerned about this 1%, 2% here. I think overall, things are getting back on track and fast. As a disclosure, we have recommended Geo Financial to our clients, and we may have positions on the stock.
All right, Amit Kumar Gupta, thank you for that disclaimer and for bringing all the stock action in perspective for our viewers this morning. We will leave it at that, but thank you so much for your time this morning.